Welcome back to Be Great Economics. This is Nate. All right, so today is Wednesday, not Tuesday. We're doing our update the second day of the trading week simply because there's no reason to just jump into panicking on the first day. So this is why I usually do Tuesdays. So I decided to bump it to Wednesday because, of course, there was a lot of news on Russia and a lot of reasons for people to panic on the weekend. It didn't seem to make sense to me to just start panic trading because this is more an investing and viewing the trends pattern platform. So what we're going to talk about, we're going to open with the S&P 500, and what we've seen over the past 48 hours is an obvious sell-off. Now what I want to point out here is that this is the trend line that I've been watching for an invalidation of a potential melt up. Now it doesn't mean that it can't happen later, but it means we are on a significant delay as we head into future targets. If we fall below our wick down here on the 24th of January, and we're covering it this much, there's a high probability we continue on a downtrend. We have our resistance to the top side, and this is just going to continue the momentum downward. We had selling climax here, and I thought maybe we could enter a Wyckoff accumulation trend here. However, that relies on phase C somewhere out here in order to actually be validated, and we are not seeing that right now. So there is a lot of fear in the markets. Now that doesn't mean that it can't reverse at any point in time, but right now all the money is getting sidelined and we're seeing massive swells out of markets. So I would expect that we would possibly go down further. Let's go to the Nasdaq, the more speculative side, right? We've been watching this very heavily. We went from our distribution phase to our mini accumulation phase. We went through another distribution phase, right? Over here, all through the beginning of February. Now, what has happened, similar to what I talked about in the S&P 500, is a sell-off that has gone below the wick of 24 January. In the typical blow-off top fashion, while this was a distributive pattern, it makes sense that this is a anxiety phase. We are falling drastically. So our next target is 12,000, and that's upsetting to a lot of people, and quite frankly, this is why I've been prepared for it and why I've been watching for it. So as you can see, we have a bit of a ways to go. We could still enter some type of accumulation pattern. Because this was a distributive pattern, usually it means there will be an accumulative pattern later. Since we're waiting on that, it could be a while until things cool off, whether it's political tensions, whether it's rate hike narrative, or as we've seen and as I've shown in the trends, the history of rate hikes is that markets tend to boom once the rate hikes actually begin and go until they can no longer handle it. But we can see, let's go look at the US 10-year Treasury. We can see that the yields have been rising steadily, meaning that sell-off in bonds and liquidating long-term holdings have continued on an uptrend, or purchasing bonds have been low, and the Federal Reserve is looking at purchasing the 2-year bonds starting tomorrow. Why? Because this uptrend is clearly signaling high inflation. And so purchasing these bonds will reduce that yield and thus reduce the inflation signal that the market is responding to. So the entire point is to suppress this trend, which is just on a rampage up as people realize both long and short end bonds are a losing bet. So overall, we see that precious metals, let's go to the XAU, we'll go to gold. And we can see that we have broken out, we are in our uptrend, and we're really just stopping out at this 1900 range, right? This has been a long-term limiting factor for gold because it goes all the way back to 2011. And so we should expect that we're going to have some trouble with this resistance here. I would not be surprised by a pullback, but I do believe that we are in a final accumulation trend phase. So we should see some consolidation here, possibly pull back to the 1875, and then to shoot up from there back to all-time highs. Let's look at silver. I am so happy with this right now. So this has been on just a constant rampage. Now, quite frankly, I think we're actually much further along right here. We are finishing out phase C. We'll probably see a pullback at the 2480 point. We'll probably end up back down 2430, 2409, and then we'll see some consolidation up here on 2550. Once we end up in that consolidation phase, that final breakout, so we're going to compress all this back here, that final breakout will send us up higher. Now, what could stop it or slow it down? Again, cooling of global tensions could definitely have an effect. energy prices dropping, but I don't think that there's a lot of reasonable reasons to think that right now for how energy prices are going overall. Now, I know that the long-term trend on oil, we're seeing the consolidation up here on this widening cone, and we are seeing that obviously there is an intent to move up here. This is already hitting the news as the spiking reason why oil prices are probably going to continue higher now that the fear effect is in. I find it funny that CNBC is posting things about how somehow Ukraine is responsible, the Ukraine conflict is somehow responsible for the oil inflation for the past 2 years. That is hilarious, but nonetheless, the narrative is shifting to the fear of the global conflict that is continuously building. So that is changing the dynamics of which people are investing. And so we should be concerned with speculative assets. And while I have a long-term thesis on the adoption of Bitcoin, there should be no reason to get extremely bullish at this point in time. The on-chain metrics still very much show the supply side function that is continuously draining, meaning that we are seeing bullish reasons to want to purchase Bitcoin on the downside. However, there's no reason to go long or add leverage because there's been no strong breakout that would indicate a positive bullish run. And we can look at, let's look at ETH Bitcoin just for altcoin narrative or altcoin response. You can see that we still haven't even broken out to the upside against its downtrend. So there's, again, no reason yet to think that there is any bullish thesis in the crypto space at this point in time. We'll look at uranium to go back to a narrative about energy. I have said already that overall we are in a downtrend. Now, I purchased this point here, but as I've posted on Twitter, oops, let's get rid of the log real quick. Posted on Twitter how we are still in an overall downtrend. And so a second buying tranche wouldn't be until we break out of this downtrend, the overall downtrend. Simply because this was a fake out as we got into political situations where fears of riots were causing uranium production to drop, but that was not the case. And so it was a fake out, and this was a strong liquidation dip. And so I expected that if I purchased on a breakout here, that revisiting that point won't be too strong. So my personal cutoff here, or my stop loss, is really this here at 1871 on the URA. So overall, I think that the market is in a lot of panic mode, and what we're seeing is the Cantillon effect into commodity resources and energy resources. I would expect a pullback in energy to an extent, but if the narrative stays strong enough, speculators will push it up even further. We are seeing a pullback on things like copper producer items as the potential for a recession continues to build. However, that doesn't mean that the price necessarily falls to the floor. As energy prices go, so does eventually things like copper because it takes a lot of energy to produce these. We have a very short time remaining throughout the year to get to $6, but at the same time, it is plenty of time based off the history of copper's volatile responses. So for me, a sensible stop loss line here is on the lower third of the triangle, put it at an angle there, simply because we're expecting this to build with gold and silver, and so we should expect 32, 33 on the CPER. So thanks for watching. This was a short run through on just the general trends that we're seeing. Again, just for targets and points, things like the S&P 500 and the Nasdaq, we want to watch for those long-term, those continual downtrends, but the potential for the melt-up can return with euphoric response, but right now we are in an anxiety phase as far as I see it. So I'm not taking any leveraged or long points. I have no exposure to the S&P and the Nasdaq at this point in time until the narrative changes and turns around. Commodities, I would stay generally bullish on, and energy sector, I would expect to continue to move up over the shorter time frame, but in the narrow time frame, the days and the weeks, I would expect some type of pullback. But within this year, I expect a higher high throughout. So thanks for watching. I will see you all next time.